Welcome to the Cherry Beckert Tax Beat, a conversation about tax that matters.
Welcome to this edition of the Cherry Beckert Tax Beat podcast. The Employee Retention Credit, or ERC, continues to be in the news, and today we're going to focus on the current status and what we need to know in the here and now. Joining in the conversation today, as always, is Martin Karamon, partner and leader of our tax credits and incentives advisory practice. Marty continues to devote a great deal of attention to ERC and leads our team of professionals helping clients file and defend these claims. So how are you doing today, Marty?
I'm doing pretty well. We have a lot to talk about today, so thanks for having me.
And as always, joining me, partner in crime, Ms. Sarah McGregor from Greenville, South Carolina. Ms. McGregor, how's life treating you?
Life is good. After two hurricanes, my power is back on and no damages, so I'm doing quite well. Thank you.
All right. Well, glad you have power. Always a good thing to have. All right, so let's move on with a little background. The IRS has taken a number of steps to address the millions of ERC claims filed, both legitimate claims and dubious claims, and therein has created a lot of controversy and confusion. First step was to stop processing new claims until sometime in 2024, and next to offer a path for employers to reconsider the claims they had filed. They didn't have a lot to say about legitimate claims, however. So the IRS continues to scrutinize and deny claims they have in hand that are not subject to the moratorium. And earlier in September, the IRS posted more information, yet again, on its website regarding appealing a denied claim, seemingly a very confusing situation for those who have filed refund claims. And again, to me, the theme is they only seem to be addressing the bad players and not about all the legitimate claims that have been filed by legitimate taxpayers. So, Marty, let's set the table with a quick rundown of ERC, and then we can move on to the latest updates.
Absolutely. Okay, so to level set, the Employee Retention Credit was originally passed way back in March of 2020. And ultimately, through a number of legislative vehicles, there came to be four separate employee retention credits, one specific to 2020 that was taken over 3 quarters, and 3 more, one for each of the first 3 quarters of 2021. The maximum amount of refund you could get could be as high as $26,000 per employee. The time to file for 2020 employee retention credits passed April 15th, 2024. The time to file for the 21 ERCs passes April 15th, 2025. The way that you qualify for these are indicating or showing that you, as a organization that had employees, suffered a harm due to COVID. Either you can show that mathematically through a reduction in your gross receipts by either a 50% amount in any quarter of 2020 compared to that same quarter in 2019, or a more than 20% decline in any quarter of any of the first 3 quarters of 21 compared to any of the first 3 quarters of 2019. And this became more controversial, if you didn't have the gross receipts declines, you could show that a government order limiting commerce, travel, or group meetings that was COVID specific in 2020 or 2021 caused what's known as a partial disruption or a partial shutdown of your business. And therein lies the problem. Many companies claim they had a partial shutdown without having adequate documentation, or were led to believe they had a partial shutdown, potentially by some unscrupulous players out there. But when they filed for an ERC, there was no indication whether you're filing under the gross receipts method or under the partial shutdown method. So the IRS really had no way to make that analysis. So what they've done over time is taken their time to get through some of these, which we'll talk about. But that's kind of level setting where we are with ERC.
So Marty, the IRS placed a moratorium on processing ERC claims in 2023. They said we're not going to process any of these new claims coming in. We'll work on the old claims. But it seemed like they sort of sat and didn't do anything. But I'm guessing they were working behind the scenes. But that seems to have sort of transitioned here this summer, or late in the summer, early September, where the IRS has now begun processing some of those older claims and some of the newer claims and working through that backlog. What are you hearing today?
I think that's a pretty accurate summary, but let me just sort of rephrase what you said with some dates that are specific. So on September 14th, 2023, the IRS put into place a moratorium on processing anything that was filed September 14th or later. They indicated that things filed before that time they would continue to process, but they radically slowed down the time by which they were processing these. In mid-August of 2024, they lifted that moratorium, and they also made some amount of investment into doing some kind of back office, we'll call it like electronic scan of what was filed. And they made some algorithmic assumptions, shall we say, about claims that were maybe good and bad, and started to process these claims. And then at that same time came through a number of denials, and some claims actually started to be processed and paid at that time too. But we saw a number of denials come through. And so that's kind of where we are right now. We're seeing them start to get through them. They indicated that they would process up to like 50,000 in that first month. I am seeing claims paid. I am seeing the IRS also indicate that certain claims they have questions about or denying, and taxpayers are responding.
So when you talk about responding to those claims that were denied, there seemed to be some confusion about when and how to respond to those notices where the IRS said your claim is denied. Send us some information, or don't send us some information. How did your clients respond to that?
Well, there was only confusion due to the fact that the IRS gave no indication whatsoever in terms of what to do when they made their first denials. So everybody was confused. There was no, they meant to say that you had 30 days to respond back to the IRS, but they didn't do that. And then 2 weeks later, they then came out with a blanket statement that you did have 30 days to make a response back to the service. That got quite a bit of pushback, shall we say. 30 days after waiting that long. Was then in mid-September changed to 2 years. So taxpayers now have 2 years to respond to a denial from the IRS of a claim for an employee retention credit payment. And sort of that's where we are right now. What the IRS really is doing is allowing taxpayers to respond by providing an indication of why they qualified, what their business does, providing all the backup of the credit calculations, indicating that there was no sort of overlap and double benefit taken with PPP and an ERC, and just providing all the information to the IRS that we actually provided to the client when we were doing an employee retention credit claim. So much of what we had in our deliverables for our clients, to the extent, and only a few really did, get denials, we had that information on hand. We were able to submit that back to the service. At the same time, this is the process for sending it back to the service so they can make an assessment of whether or not to push it to appeals or not. You can also actually file with the district court or within a 2-year period as well. So what a lot of our clients are doing is providing the facts back to the IRS so that the IRS can make an assessment of whether to push it to appeals with a recommendation to pay or to ask for more facts. Alternatively, at the same time, they're kind of waiting a little bit to see what comes at that time, because they have 2 years from the same date they got the denial, by the way, to file with the district court. And so we're looking at two different things. One, the appeals process, two, the ability to litigate, but both with the beginning same date of, we'll call it a new statute of limitations within which they can make a response.
All right. I think we're kind of incorporating some of this, but just for clarity, we have a second ERC voluntary disclosure program. It opened August 15th. What can you tell about that and how that corresponds and interrelates to the other stuff we've been talking about?
Good point, Brooks, and I probably jumped ahead a little bit, so let's go back in time. So with that said, toward the end of 2023, the IRS put into place a voluntary disclosure program, which was and provided the ability to taxpayers to make an assessment of the monies they received for ERC and make a determination of whether they actually believed, with all the new guidance that had come up from the service, of whether they actually qualify for this employee retention credit. They could, in that case, return the amount paid by the IRS, but hold on to 20% of the amount that that came to them, in addition to the interest amount that was paid to them too. The reason for that was to encourage taxpayers to give back the cash, but also to make them whole for potentially paying what they've defined as an ERC mill, or potentially someone who misled them into qualification. They probably paid them a fee equal to roughly approximately 20%. So this gave them a real ability to pay back the funds without being put in harm's way. That ended in March of 2024. The IRS opened up a new voluntary disclosure program, but they changed the amount of withholding for the taxpayer from 20% down to 15%. So the taxpayer can still make an assessment of whether or not they really should have gotten these monies and keep 15% of what was paid to them and then pay back the IRS. And so that's kind of where we are right now. And that ends November 22nd. So time is a bit of the essence in terms of taxpayers making that final assessment.
Yeah.
And if a client is already, an employer has already received a notice of denial from the IRS regarding their claim, they're not eligible for this voluntary disclosure program. Is that right?
Yes, that would turn it into an involuntary disclosure program, I think, in that particular case. But yeah, that's exactly right. So it's only for those taxpayers making the determination on their own, with no indication from the service. To the extent they are under examination by the IRS, they no longer qualify for that VDP. And they'll have to go through the process of making the response to the service in the normal course of business.
Where can an employer go to find out some more information about this voluntary disclosure program?
The IRS has a pretty robust website and description of what to do to qualify for the VDP. Honestly, if you just do a search, IRS voluntary disclosure program, and put 15% in there, you'll be brought to their webpage. And it tells you everything about preparing what's known as a Form 15434, which is an application for the voluntary disclosure program. It tells you everything that has to go within the claim, but also here's something else they could do. We would be more than happy to walk them through the process. We have worked with some companies who didn't work with us to file, but did work with us to give some of the money back as their auditor made an assessment of whether or not they actually qualified. So it's pretty apparent on the IRS website, but we're more than happy to walk any client through it. And they have, again, until I think 11:59 p.m. local time, November 22nd, 2024.
Not the Form 142345, not to be confused with the 56789 version B form, right?
And not to be confused with your TPS report either. So that's correct.
All right. So let's talk about, again, there's a lot of negativity on all these. Clearly, you can see the IRS slant on all this, but they've gone out and, I'll say, they've come to the IRS in the last few years of putting their dirty dozen tax fraud scams and everything.
Yeah.
So now they have their dirty dozen, 12 indicators of an incorrect ERC claim that they're kind of throwing into that same bucket. So what do you have to say about those?
Yeah, I think they've actually had some decent indicators on their website indicating what might show a bad claim. And a lot of it has to do with whether or not you paid somebody on a contingent basis, or whether or not they would make the assessment within like 2 to 3 minutes of an automatic qualification. What they most recently did, though, was add some areas that they have seen that would indicate that these are bad claims. And I kind of agree with some of them right now. They're looking for things like in the calculation, you have an overlap with PPP, meaning you're taking a benefit for ERC on a wage funded by PPP. Clearly, that's something that should be clearly indicated in the work papers. That would be an overclaim. Another thing is they're looking at large employers, those that had more than 100 employees in 2019 or 500 employees in 2019 for respectively the 2020 and 2021 ERCs, where they're claiming wages for more employee. Generally, you're only for those large employers allowed to claim wages for people who were paid not to work. What I've seen is a lot of the ERC mills include PTO paid to these employees as time not worked, which under the IRS guidance does not qualify. So they're looking for that. They're also looking for those that have made ERC claims under the, call it government order test, where they have no support of what the government mandates are. And they're also looking at essential businesses that made this qualification that would have a tougher time to say that the mandates actually had an effect on them.
So using that as a guide, is that when a employer comes to you where you did not work on the original claim, those are the kinds of questions, the easy questions to handle first, to consider the quality of the claim that was filed by this employer before you got to look at it.
That's exactly right. Although 9 times out of 10, what I find is that they honestly have very little support in terms of like why the business was actually affected by the actual government orders. It's tying the orders to the business and how it caused a partial shutdown, as opposed to saying there were orders out there, and then yet you see the finances of the business still improving. And so you really need to tell that story and connect the dots there. But those points we just went through are areas where the IRS, you'll expect them to ask questions around that.
And so being prepared to respond to those will certainly help in those situations. You've also been working with some professional employer organizations, which help to file claims on behalf of or in connection with multiple employers that they support. That's got to bring a different level of challenge.
A different level of challenge, and clearly a lot more frustration on behalf of taxpayers who work, especially with a third-party payer, PEO, right? Because that client then does not have a direct relationship with the IRS for payroll tax purposes. They have to go through their PEO, and those PEOs are filing batch claims for multiple clients at one time. Thankfully, recently, the IRS, just a few weeks ago, came out with another supplemental claim process that also ends on November 22nd, 2024, that allows PEOs to, without revoking an entire claim, it allows them to pull certain taxpayers out of the claim and keep the claim essentially filed at the original time. And so this will be something that I think is welcomed by any taxpayer who has a legitimate claim through a PEO, because the PEO won't have to like stop and refile or anything like that. It will keep things going, because clearly taxpayers working with PEOs and third-party payers are the ones who are most frustrated because the IRS has taken a long time to get to these large batch claims.
Marty, sorry. I was going to say, Marty, I just have, a simple question. I filed my claim 9 months ago. When am I going to get my money?
If you filed your claim 9 months ago, that would be after January 31st of 2024. So you are again on a moratorium. So I cannot tell you that specifically, but I know that the IRS is going to work through all the claims filed prior to January 31st, 2024, and then come up with new procedures for those filed after. It's not to say that you won't ultimately get paid if you have a legitimate claim, but I wouldn't expect it anytime this year.
All right. I filed my claim 12 months ago. When am I going to get my money?
There's a good chance that you will get it before the end of the year. And the reason I say that is because I'm seeing the IRS indicate that they are looking at claims filed in June and May of 2023 and moving forward from there. And so I see a lot getting paid right now.
Okay, good. Just wanted to really cut to the chase right there. Sarah, did you have one more question?
I was going to say that you mentioned employers being frustrated. I think some employers were on the verge of, and may have gone ahead to file some lawsuits with the district court to force those refund claims action on it. So this here in the IRS is moving and now issuing actual checks to clients is encouraging.
I think they're jumping ahead of a few of those lawsuits that have come their way. And so I was starting to see more of that. Yeah.
All right, let's move on to final comments. Any final words of wisdom, Marty?
I don't know how wise it is, but I would just say this. Take a final look. If you didn't claim the employee retention credit, don't be afraid of it if you think you have a legitimate claim. I think it's something you should look at filing because you are entitled to it as much as anyone who filed it 2 years ago. Beyond that, though, if you have any questions, please reach out to myself or anyone else at Cherry Becker. It will get directed toward my team, and we will be more than happy to walk you through exactly what makes sense, from voluntary disclosure to filing a new claim to maybe getting ready for a potential examination and just making an assessment of what documentation you have.
Sarah.
I was going to say that just remaining patient, number one, if you've already filed. but also being on the front side so that those that respond quickly to those denial claims are going to get looked at first. So waiting 2 years to file your denial, a response to your claim being denied is going to put you at the back of the line again. So trying to be ready to respond to questions or issues or information requests is going to be helpful to move this process along.
Excellent point. I'm going to go with a recast of something I've said a couple times. I continue to be amazed at how the IRS is trying to end run a legitimately passed federal law of Congress. They do not have the ability to try to administratively repeal a tax law, and so they've been trying to do it. And I'm glad to see some of this money starting to be refunded. But the other thing is, I'm also glad to start seeing some of our congressmen on both sides of the aisle starting to make comments along these same lines, that the IRS is not authorized to say we're just not going to refund money to people that are entitled to, because we don't like the fact that some people aren't entitled to and file about bad claims. So, all right, so keep it going, keep it filing, be ready, and talk to Mr. Karamon. All right, let's wrap up the discussion. That's into today's update on ERC. Thank you for listening in. Quick disclaimer that we are not providing tax advice on this podcast. Please consult with your tax advisor, hopefully at Cherry Beckert, with your specific tax issues or to discuss information from today's podcast. Check out the firm's website at cbh.com for the latest guidance and materials on this and other tax and business topics. That's the conclusion. Please like, share, and subscribe. Thank you, Marty. Thank you, our listeners, for spending your time with us. We truly appreciate it. Let's call it a day and go forth in peace.